Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at mining stocks, BHP, RIO and Fortescue, and why they're moving up and how far can they go. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now, this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now, last week we saw the big miners BHP, RIO and Fortescue Metals all rise strongly on the expectation that demand from China will increase after the central bank in China said it would reduce the amount of cash banks needed to hold in reserve. Fortescue was up 8%, with both BHP and RIO up over 4% for the week. All three are trading very near their all-time highs, with BHP and RIO having been in their latest bull run since 2016. So how long will this bullish run continue and how high can these stocks rise? BHP and RIO tend to run together, and outside of the pullback in both stocks due to COVID last year, the bull run on these two stocks has largely been quite normal. And so I would expect that we will see both stocks continue to rise for at least another 12 months and possibly up to another 2 years before the next major fall in either stock. As far as price, while both stocks have done well, RIO has not performed as well as BHP since their lows in March last year. And as such, I believe RIO will outperform BHP in the coming year or so, with both stocks likely to show 20% plus gains. Now, Fortescue Metals tends to run on its own, having risen over 600% since September 2018, whilst BHP only rose around 50% and RIO around 80% in the same time frame. Now, it's possible Fortescue could continue this trend of outperforming both BHP and RIO over the next year or so, although I do not believe it will be by anywhere near the same margin. But rather, I would expect a more subdued rise of around 50%. That said, Fortescue does need to break above its previous all-time high to prove that it can maintain the current bullish run. Now it's time to get into what is happening on the market, and so let's get into what were the best and worst performing sectors last week. Well, the best performing sectors last week, that included materials up 4.47%, followed by utilities up 4.19% and consumer discretionary up 1.72%. The worst performing sectors, well, they included information technology down 3.05%, followed by energy down 1.2% and financials down 0.38% for the week. The best performers in the ASX S&P Top 100 stocks included Spark Infrastructure Group, and that was up 17.41% on news of a possible takeover bid. Fortescue Metals, that was up 8%, followed by BlueScope Steel up 7.48%. The worst performing stocks, well, they included Afterpay, and that was down 12.17%, followed by Ansell down 3.67% and the Star Entertainment Group down 3.5%. Now, Scentre Group, Challenger, Altium and Stockland were also all down over 3% last week. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
It seems like Groundhog Day every single week. Every time I wake up in the morning, I see what's going on in COVID, and it seems like we're getting the same sort of news as we did the day before. But the stock market seems to be doing exactly the same things as it was doing last week and the week before and the week before that. It seems, as I said, it seems a little bit like Groundhog Day, and it really sometimes I feel like I just keep repeating myself. But that's okay. Sometimes the market does get stuck in these sorts of moves where it's not really direction on what that is what is causing that is really a lot of indecision and a lot of uncertainty. Now, we can understand that when you do look at the news and all you see is COVID, whether it's in Melbourne or whether it's in Sydney or anywhere else in Australia, or even again around the world, and that's all we're seeing. And so that creates, how do I say it? That emotion that we see from the TV does play on the minds of big people, big industry. It does play on the minds of CEOs. It does play on the minds of the government. It does play on the minds of all of the fund managers there, because we're saying, well, what COVID, if it gets worse, what am I going to do? How am I going to do this? How am I going to direct my business? Are we going to expand our business? Are we going to contract it? What am I going to do with the cash flow that we've got now? Are we going to lose more clients? Are we going to get more clients? How do we get more clients? So many different decisions are going on, and that's on all levels of business, not just businesses such as ours or smaller businesses even than ours. I've talked to a lot of business people and they don't know, and they're really not sure. How do we plan for something that is uncertain? And again, that's what we're seeing reflected in our market. But let's now go and have a look at the chart and see exactly what's going on the marketplace. Now on the screen, you've got our weekly and monthly chart. The monthly is on the left as normal and the weekly is on the right. I haven't really changed anything. I'll put a little bit more things on the monthly chart, but you can see the weekly chart through here. Volume's pretty much staying consistent now since sort of about April. We had a bit of a drop off through that early April through there, but a little bit of that would have been around the Easter time, and then obviously a drop off in December, but pretty normal. But if we scrunch it up a little bit, you can see volumes through here are lower than what they were through 2020. And if I put my little crosshair on, you can see here that if I just put it on pretty much the tops of everything right across here in 2021, you can see a lot more bars, a lot of the bars, or most of the bars pretty much in 2020 were above that horizontal line. So volumes are lower this year than what they were last year, and that's really surprising because obviously last year we saw there was a lot of panic through here, and obviously we saw the panic sell-off with the COVID low, those few weeks flying down, and all of a sudden we saw some buying. But yeah, all the way through here, volumes were more than what they were through here. And this suggests to me that either all the money's in the marketplace, so therefore there's no new money coming in the marketplace, or we're a bit more reserved and holding back a little bit. And it's always best to understand what the market is doing on the bigger picture. All too often, the biggest mistakes I see investors and traders is looking at the micro view all the time. And if all you look at is the micro view, then you're only going to get short-term emotions. Now, looking at this, we can see, again, this is my take on that trend moving up out of the COVID low right through to that June 2020 high. And then it went sideways. You can see the angle is completely different now since around that September 2020 low. And it really sort of changed from around about here. You can see that really did start to take off on that same angle, and I think if I move that, you can see it's pretty much that same angle of what came out of the COVID low. But from around about this area in December 2020, which really correlates with the volumes, that we've gone sideways, up a little bit sideways, up a little bit sideways, and so we're doing the same thing. And that's what I'm saying, it's Groundhog Day. It's up, sideways, up, sideways, up, sideways. Now, interesting thing through here, if we look at our weekly chart, you can see here, this is the high, or the high there of 593 on the 11th of June, just over a month ago, 5 weeks ago. And we saw the close there at 7577 points. And if we go and use our little tool, you can see here from there to there, our market has really only risen 1.16% in that's 1, 2, 3, 4, 5, 6 weeks since that point of time. So that's what I'm saying. We really haven't gone anywhere. Now, interesting, if I extend that out a little bit so you can see we had an all-time high on that bar. It broke through to 7655.9 points. Traded down and then we came back up here, 7634. This bar, 7654, and I showed you this bar last week. It was 1 point off making a new all-time high, 7654, as opposed to 7655. So it was 1 point lower. Last week, though, we went to 7656, so we beat it by 1 point. So 2 weeks ago, we missed it by 1 point. Last week, we went above it by 1 point, but we came back to close at 7630 points. Now, if we're looking at that, that's the highest close that we've ever had, 7630. Prior to that was this bar 7624. So it's only 6 points higher. So that's what I'm saying. We're not really going anywhere, but the market does, to prove it's bullish, if it really does need to break through this 7,600 point level. There's a lot of resistance around that level. Now, it is pretty much tracking. If I go back to the bigger picture, it's sort of tracking along this line. I was expecting a bigger pullback to at least that line, if not more, in a move down, but it's not actually wanting to do. I remember I keep saying I wanted sort of an 8 to 12%. Well, 8% is somewhere around about that 7,000 odd point level, and 12% was around about sort of that 6,700 point level. And if we had a nice big orderly pullback down to that, I'd be a little bit more comfortable. But again, like I keep saying, the seesaw, we're walking up the seesaw now, and we're getting somewhere near an apex, but where is it and when is it likely to fall over? And to me, the longer our market goes up in time and price, the more probability it has that it will fall over. And I think, and people will be going to me, well, that makes sense, Dale, the longer it's going up, the closer we are getting to a peak. Absolutely. And that's what we need to be wary of, is we see when is the safest time to enter the market. Is it in the last part or the first part? And I know the answer is the first part of any bull run is the safest time to get into it, but it's also the hardest one to predict when the low is. The last part is everybody wanting to get into it, so we generally see rampant speculation on the market, pushing it up really, really fast to that end peak. But we're not seeing rampant speculation at the moment. Whilst we are seeing a lot of individuals with not a lot of knowledge getting into the market, borrowing money, we're not seeing rampant speculation like we did prior to the GFC and other periods in history where we saw large falls. So that's why I'm suggesting our market doesn't really look like it's going to crash, or it can't crash, because we haven't had that rampant speculation. Now let's go back to the charts. I just want to show you some more thing on the monthly chart before I wrap up today's report. Now looking at this is your monthly chart, and this is the whole history that I've got on the All Ords on this chart back to 1982, and you can see how it runs up along that grey line, sometimes breaking below it, breaking above it, but generally it keeps tracking around it. And obviously we've seen since the GFC low in 2009, the angle's been a little bit steeper and we haven't come back. But again, that's around that 6,600 points is this sort of high, but it's gone more vertical since the COVID low. Now, if I put on my 8 to 12%, rule here, you can see here there's 12% around about that sort of, what did I say, that 6,700 points, just above where there's pretty strong support levels through here. So again, it wouldn't surprise me if our market came back to sort of these sorts of levels back into this, but it's a little bit more like the momentum that it's had since 2009. But I want to share with you part of the reason why I thought 7,600 would pull up our market. And this is quite a strong resistance level on the All Ordinaries Index. There's quite a few different reasons why I've picked around that 7,600 points. And people who've done our Diploma of Share Trading course will know exactly why that level is there, because they'll be able to work that out for themselves. But I won't go into how I've calculated that with everybody on YouTube. It just takes too long, and it's part of our course. If you want to learn how to predict where levels are and support and resistance levels are, then please by all means have a look at our course. But as I said, 7,600 was a pretty heavy resistance level I would have thought would hold up the market. The next one here, and I think this will be the end of any bull run, if it did get up through to this, is 8,600 points. I think that would really pull it right up. But the interesting thing is we broke through it here, this level, that 7,600 point level there. But as you can see, it closed at 7,585 in June. So it'd be interesting to see where July closes. Right now, we're closing at 7,630 points. So 27 points higher than that. But if we do turn around and start to close below it, then it would suggest this level is holding, because we're not really breaking through it by much. If July pushes on and closes way above that sort of level, then I would suggest it is on the way to that 8,666 points. But right now, the jury's still out a little bit, and this is why you do need to be a bit more careful. So, as far as your stocks are concerned, just be really careful with your stock selection. Please do that. Make sure that this is not a signal. And as I keep saying to people, even though I think the market's got to come back a little bit, it is not and never will be a signal for anybody to sell any stocks. You always need to look at the stocks themselves, not make knee-jerk reactions on people predicting where the market may be. You ask me where the market's going. You want to know where the market's going. You want to know where your stocks are going. But the interesting thing is you actually don't necessarily need to know that that from an expert. You need to know that for yourself, because only when you understand it yourself is then you'll follow your rules and you'll actually follow the processes. All too often I get comments from people in my YouTube channel and people sending emails through that watch us on the YouTube going, look, I don't know what my stock's going to do. You know, I've bought this stock, how far can it go? Or it's falling this way, how far can it go? If you're asking those questions of yourself, that is a huge, huge signpost that you don't have good, solid rules around why you're buying, why you're selling, and how you're managing it. And life will be just so much more peaceful and more profitable if you understood those things, and it doesn't take too much. First step, buy my book. It's called Accelerate Your Wealth. It's your money, your choice. Get it. It'll help you. If you want my first book for free, which is called How to Beat the Managed Funds by 20%, just get online and get it. We can send it to you for free. You just got to pay the shipping. Now, it's on the homepage right at the top on the left-hand side. There's a big thing saying How to Beat the Managed Funds. Click on that. You'll go straight to the book and you'll be able to purchase it, or just pick up the phone and ring the team now, 1300 858 272, and say, hey, Dale says I can have his first book for free. I just got to pay the shipping. And be my guest, and it'll help you understand how to buy, how to sell, how to manage a stock in these sorts of times. And what I've talked about in that book still is completely relevant today. So please get into that and really do yourself a favour, because if you're guessing, then you're going to get it wrong a lot of times. And I'd rather you be knowing that you're doing it right and having rules around it, because you'll be far more profitable, a lot less stressed. So please, right now the market is, as I said, we could be at that pivot point of that seesaw where it may start to fall over. And again, I need to err on the cautious side, and the cautious side says to me I need to be prepared for it to fall away. If it goes up, I've got no issues. If it goes up, I have zero issues, because the stocks I own are going to go up. The stocks we're trading for our clients will go up. But if it does go down, then I'm going to have to start making decisions. And so that way I always prepare for the worst and I hope for the best. But now's the time we get into the questions that you've asked for me, so let's get into that now. Now, before I get into the questions that you've asked me, I wanted to bring up the charts of BHP, RIO and Fortescue, because I did talk about those earlier in our report today, and I just wanted to show you what I was thinking there. So looking at your screen, you've got BHP up there, the monthly chart on the left, the weekly chart on the right, and I will actually show you the more monthly chart, which makes it a little bit easier. So this is the low in 2016 I was talking about, and you can see it's just a really beautiful, beautiful trend this stock has been on since that 2016 low. And you can see here how it just moves up and around. The COVID low pushed it way below here, came up, hit its head, came back down, but it's just traveling along that line. And you can see here where it closed on Friday, 51.87, its highest close it's ever had. It had a high of 51.91, and you can see here it's just broken through a new all-time high, and it did that on Friday actually. So what a good looking stock, and as I said, I do expect this to move quite well over the next 1 to 2 years. I don't think this bull run is over, but again, looking at this stock, I really don't think it's going to be doing 50 or 60%. I think it's going to be more like 20%, could be even to 30% over in that time, but I do like it at this point in time. But looking at the next bit, I think we are $56-ish, $58 is very, very much on the cards over the coming 6 to 8 months, possibly 12 months. Looking at RIO and comparing the two, so here's RIO, and again, if I scroll that out, you can see it's a bit of a different from BHP, but it still did have that low in 2016, moved up, came into the COVID low through there into March 2020, but it's really, it's slightly different than BHP, but it still does trend beautifully well, and I think this one will actually outperform BHP over the coming 1 to 2 years, because it hasn't really done as well since this COVID low as what BHP did, as I mentioned earlier. You can see here the high there of last week was 131 with a close of 130. Its all-time high was a couple of weeks ago at 132, so I think there's some good moves there, but it's going to be a little bit more volatile. But I think RIO will outperform BHP in the next 1 to 2 years, but looking really, really good. Let's have a quick look at FMG before we get into our questions, and you can see the difference in the trend here. Looking at that, it's a very, very vertical trend after being this big horizontal sideways move, and you can see here that FMG had a low of 352 in September 2018, and if I put my little tool on here, you can see what I was talking about earlier, over 600% rise in that time through to that high there in January 2021, so earlier this year. Came down into a low in March, and right now it's moving up strongly to get through this high here at 2640, and that's what I'm saying. I think it needs to get through that to really prove that it's strong. So we'll actually see what's happening to see whether it's strong. But looking at this, it's still trending along nicely. If you look at that, you can see it's really moved up its angle from where it was before. And if I go to here, you can see here it's diverted its angle. It's got more bullish. And again, like I was saying, is you get more euphoric buying towards the end of the trend. And the steeper this angle gets, the more probability it is it'll have its high and start to move back. That's why I don't think this one will track along as fast as what it has been over the last couple of years. And whilst I think BHP and RIO are good buys, I still think RIO is probably the better one out of those three. But again, it's just my guess at this point in time based on what I'm seeing. And whilst I can predict all I like about what any one of these stocks might do and how much it will rise, you should never, ever, ever take anybody's view on that. You should always look at the stock yourself. You should always understand why you're buying it. Look at the fundamentals if you want. Look at the P ratios, the dividend yields, the EPS, the debt to equity ratios, all sorts of other fundamental data. Have a look at those and then look at the chart and look for direction and strength on the chart and look for momentum on the chart and look for some of the other indicators, the patterns and the price and the time is telling you on the charts to determine whether this is a good buy for you. And if you don't understand how to do all of that, then maybe you might want to buy my first book or my second book, Accelerate Your Wealth, as I said before, or even take a look at our course, because really these stocks are good, but how far and how well they track over the next 1 to 2 years is really up to the marketplace. And I can't predict what's going to happen with COVID. I can't predict what's going to happen with anything to do with the market in terms of economically. There could be all sorts of things happening economically over the next 1 to 2 years that could affect the growth of these three stocks. And it's the same with any expert making predictions on a stock. You really do need to take that. I'm not going to say it with a grain of salt, because we do have expertise in these areas and what we think. But again, it's based on probability of what we're seeing in terms of the data, the economic data, the fundamental data, and the technical data that we're actually seeing. But our opinions can change over weeks, months, days, or even years, depending on the data that's coming through. So what we're seeing right now is these stocks do look bullish. BHP and RIO are probably my preferred ones out of these three, with RIO being probably the preferred one right now. But things may change. That's all I want to say to you. But now's the time to get into our first question. And the first question we have today is from Peter, who says, "Hi, Dale and Janine. I'm interested to hear about your comments about my newbie analysis on AZJ. I've drawn a sloping trend line on the weekly chart and recognise a 2-bar break up away from the trend, indicating that it looks like a buy. Have I got this right?" It looks like what sounds by what you put on your question looks like or sounds like you've read my book. So well done. But let's go and have a look at the stock. So look, AZJ. So I'm going to bring that up now. So here's AZJ, and looking at this stock, to always look at the monthly chart, and you can see here it's quite a volatile stock. Not a buy and hold type of stock. So you could have bought it back in 2013 at the same price it's trading at today. Now, looking at the trend lines, if I put a trend line on this monthly chart and click on that, there it is. You can see that it's moving through that monthly trend line on there and doing really, really well. So I do like it. I do agree with you. It's moving up. Now, looking at it, you're using rules from my book in order to look at purchasing the stock. Looking at it on a monthly chart, let me use the trend line tool. Now, don't talk to my assessors or anything about that, but I'm just putting a rough trend line on there. I could put a lot more trend lines on this stock, but this is sort of roughly where it's going to be. And you can see there it's moved beautifully through or from that low there down in May, moved up, made a peak at, let me get my pointer on that, $3.91, fell into a low there in mid-June or end of June there at $3.68 and is moving up nicely. So I'm quite comfortable with that stock. I do like it. I really do like it. I think you've done well. I think your trend line may not be as perfect or same as mine, because as I said, I'm just doing a rough trend line, so don't tell our assessors. They'd probably shoot me if I don't, because I haven't got it perfect yet, but you can roughly see what I'm talking about here. It has broken through. You're probably going to get a little bit of resistance around this sort of area around through here, because it looks like it's fairly solid resistance. If I go back, and you can start seeing where this horizontal line is picking up some of those lows right across the chart there. So probably around that $4 mark, you might find a little bit of resistance. So just be a little bit careful around that area. But I do like it. I think it's a great pick. So well done. And you can see how easy it is. I mean, I'm not sure whether you have done our courses or not, but but at least you would have read one of my books to pick up that. So it's not hard for you to be a good trader and pick the right entry points. Entering into the stock earlier than what we're talking about at the moment would have been a lot more higher risk. So I do like the stock. So well done for picking that, and thank you for sending in your email. Now, in the last week, we did receive a lot of comments thanking us for the content that we produce each and every week. Now, also my explanation on stop losses in last week's market report got a lot of different comments as well. A lot of people one person said it was the best explanation on stop losses they'd seen, and other people said, wow, my take on stop losses was fantastic. So again, to me, that was just what I'm talking about is really high level basic stuff. It wasn't really highly technical stuff on stop losses, if I can say that correctly. So there's a lot more to understand stop losses and putting them in the right spot, and that's why being a trader and investor are two slightly different things. The stop losses I talk about in my books, all investors can use, and the more beginner traders can actually use those. So please, if you haven't seen that report last week, please go back and have a watch of it. Have a look at the stop losses. But again, you can read about them in how I use stop losses as an investor and a basic or beginner trader in my book. So you can look at those as well. But again, as I said, please go and have a look at it. But to me, we did get a lot of comments, but we only had one question, which really must be a first for this channel, because I can't remember a time when we only had one question on our reports. But thank you for sending your question in, for the gentleman that did that. And thank you to all of you who did post, or who posted genuine constructive comments. Now, we do get people putting up junk comments or people putting up serious CRAP, and really I'm not sure why you waste your time putting that stuff up. We're here to help people. If you don't like it, go to another channel. That's fine. I don't mind that. We're not always going to suit every single person, but if you have constructive comments, please put them below. And also, if you have any questions that you really do like me to answer or want me to answer, just stick them below. I'm going to give you my no BS approach. It's going to be straight up and down. If you don't like it, as I said, there's another channel for you probably that you will like with that. I'm going to tell you what I feel and what I think and what I know that is good for you to hear. I'm not going to tell you what you might want to hear all the time, but remember, on this channel we do these Monday market reports each and every week. We also do our live stream every Tuesday night where you continue to get our no BS approach to the stock market. So hit the subscribe button now, click the bell on the right of it so you know when we upload a new video and go live. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.